So I got a real quick, simple video for you guys. For those of you that never traded the futures market before, you don't know the difference between the ES and the MES, there's no need to worry. We're going to jump into that in today's video. Hey, welcome back YouTube. My name is Mike Swartz, trading coach at epitomytrading.com. If you're new to my channel, take a moment, hit the subscribe button down below, and don't forget to turn on the bell notifications. Now, in this week's video, we're going to talk about the MES, which is a micro S&P futures contract, versus the E-mini ES futures contract. Now, both of them, represent, I shouldn't say but both of them represent the S&P 500 index. So they try to mimic what the S&P 500 is doing. And in the futures market, there's a few things I need to explain to you first. What a tick is, what a point is, and we're going to talk about the tick cost and the benefits of one versus the other. Hopefully after this video, you'll have a clear understanding, which instrument is right for you to trade. So first and foremost, if we look at this highlighted area right here, 2821.00. Well, if the market moves up to 2821.25, that is considered one tick. If price moved from 2821 all the way up to 2822, that would be considered 1 point. Now, the same thing could be said to the downside. If we move from 2821.00 to 2820.75, that is one tick. Now, this is a DOM right here. This represents the micro ES futures contract, the MES futures contract. The DOM on the right is the ES E-mini futures contract. Now, I'm going to show you guys some big differences here in a moment. First though, if we look at the charts look relatively the same. I tried to scale them pretty close to one another. And you can see all the price moves, pretty much look identical from one chart to the other. Now, let's go ahead and let's try to put a trade on real quick. We're going to try to get involved in the market with one contract, keep it real simple. And we're going to put it on, we're going to work a limit order at 2821. And now we're going to simply hit play. Now, you might say, how are you going to play this, right? How can you just start and stop market data? NinjaTrader has a feature called playback. I'm recording this video on Saturday, May 16th. The markets are closed. This is a great time to hone your trading skills. And I do have a free course or a free resource coming out teaching you guys how to use the NinjaTrader platform, how to download it for free. And when I say for free, you can use it for demo trading for free until forever, until you decide to trade live. Once you trade live, then they ask you to pay for the platform fee. But if you only want to use it to demo, to teach yourself the skill of trading, it's absolutely free to use. And again, there'll be a link in the description down below if you'd like to take advantage of that free resource. So what we can do here is we can adjust the time. So I'm going to slide this down to 1, which means 1 second is 1 second. Now you can see we're filled. Now here's where the big difference comes in between the two contracts. If you look right here on the MES contract where we got filled, if the market moves one tick in our favor, then we're going to make $1.25. If the market goes against us by one tick, we're going to lose $1.25. Now, I did do a more thorough video on 5 reasons to trade the micro futures contract, and there's a link in the description or in the cards right above. You can click on that and watch that video. But if we look over here on the ES DOM, you can see if price moves one tick in our favor, it's worth $12.50. If it moves down against us, it's a loss of $12.50, which is 10 times the value of the MES futures micro futures contract. Now, just so you guys can see this real quick, $1.25 times 10 is going to give us this $12.50. Now what I'm going to do is I'm going to simply close out both trades. Come back over here, close this one out. You might have to hit play. All right, so we're closed out of both trades. We no longer have any trades on. But here's where the real benefit comes in. If you have a really small account size, $1.25 might be the right risk profile for you to use. I don't know your situation, and I'm not licensed to give you that advice. That's something you're going to have to come up with on your own, what your proper risk tolerance is. But as your account starts to grow, maybe you're not quite willing to risk $1 or $12.50 per tick, but you want to risk more than $1.25. Well, in that case, we can actually, trade multiple contracts on the MES. Now, if you're going to trade 10 or more contracts on the MES, at that point, it just makes sense to trade, the ES futures contract. All right? It doesn't make sense to pay more commissions to trade the MES 10 contracts than one contract of the ES futures contract. So what we're going to do is, let's say that we want to place a trade and we want to have our stop loss right below these lows. Well, for this example, we're going to turn on chart trader so we can just trade off the charts. This will be a little bit easier for this demonstration purposes. So what we're going to do now is we're going to see if it's at the same price, 21. We're going to work a limit order. We're going to make sure they both get filled at the same exact limit price. And that limit price is going to be 28.20. We're going to do the same thing on this chart right here on the right, which is the ES 28.20. And we're going to set our stop loss. We're going to try to buy 4 contracts on the MES futures contract versus 1 contract on the ES futures contract. All right, we're going to set our stop loss 1 tick below it. So we're going to hit sell stop market. And we need to make sure we have all 4 contracts that are willing to be stopped out at that price. And then we're going to set our stop market on this one, just 1 contract, since that's all that we have on. And now what we can do is we can simply, let me actually turn this off real quick. I'm going to hide chart trader just so we have more real estate on our charts. All right. So now we can hit play and we're going to speed this up a little bit. All right. Now we're filled in the trade. Now I want you guys to get a chance to actually see the difference. Now think about if you were in this trade. Now, if you're in the trade and at this point you're like, I should have traded the ES, I'd be up $137. Right? And you look at the micros and say, I'm only in the micros. I got 4 micros. I'm only up $55 at this point. All right. Well, we're going to continue to play this. And actually, we need to go ahead and put a take profit in place also, right? Let's assume that we're going to make money on this trade. And we're just going to put 4 contracts up here. And we're going to sell a limit over here. And we'll make that identical prices. We're going to go back and hit play. Now like, oh, dang it, I should have done it. I'd be up almost $200 on this trade. I would be up $200 at this point. And now the market's starting to go against us, right? Now on the chart on the left, we used less risk. We traded 4 micro futures contracts. We're down only $75, where on 1 ES contract, we're down $187. Now, hopefully the point that you're starting to see is we're trading the same chart. We're trading the same type of price action. So as you're trying to build a small account, because if you have a $100,000 account, realistically, you're probably not trading the micro futures. But if you're trading a small account, like I started my small account challenge with at the beginning of the year with $151.97, I believe. And there's a link in the description down below where you can follow that small account challenge along through the process. You can see I traded the micro futures contract throughout that entire process. And you can see as the market keeps going against us, right? Now we're trading the same chart pattern in $145. Yeah, that still stings a little bit. You don't want to be down $145, but man, compared to $362, you're like, whew, glad I'm not trading the ES right now, right? I'm glad I'm not taking that full $300 loss. I'm only down $145. Right, versus 300. At the high point over here, you might have been saying, if I should have traded that, I'd be up $200, blah, 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 blah. And we'll let it play out. And you can see we lost. I can't be correct. Let's let it play a little bit more. Well, I don't know why it's showing this price down here, but we didn't lose the same amount on each one. Let's see if we can turn on Chart Trader and see if that actually changes anything. Actually, it won't change anything. It's showing 678 because that is the combined loss of both contracts. All right, since it's the same account, we're in the playback. It's going to be the same loss regardless. It's not going to show us one versus the other. But you get the point. You guys can go back and watch the video in slow motion and just see as the market was going down. Now, let's think about this. If you just took a nasty, huge loss, but you still felt that the market was likely to bounce out of here, would you still be willing to take a trade on the ES knowing that you lost, $400 or $500 on that trade? Or on this one, you lost, I don't know, I'm guessing around $200 or so on this trade. You'd be more likely and more willing to probably place another trade. And what I'm saying is you'll probably be in a better place psychologically. And let's just fast forward and see what would happen. What if we would have still had the mental capital to still take another trade back up? See, we test out these lows down here. Now the market's running back up. All right, you just got burnt pretty bad. Both trades both got taken out of the trade for a loss. One just happened to be for a much larger loss than the other one. And I guess the point I'm trying to convey to you guys is if you're a new trader, if you're just starting out, if you're trying to build a small account size, don't be so anxious to jump to the ES futures contract. Yes, you can make a lot more when you're right, but in the learning process, you're also going to lose a lot, and you're going to lose a lot more than you win most likely. And you don't want to waste all your trading capital by trying to make Lamborghini money overnight. All right, that's not the mindset we want to be in as traders. We want to be in the mindset of every day I want to come into the market and just make money. You don't have to say I want to make $1 million, but even $1 a day that you keep making over the course of time, that is going to build into something sustainable. And again, you can see my results of the small account challenge in the link in the description down below. Like always, hope you guys enjoyed today's video. Until next time, good luck and good trading.